please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A conversation going on certain fundamental ideas, perhaps stocks that you can work with. We have Prakash Diwan joining in for the same. Good morning, Prakash. First, the OMCs. I don't know what the call is going to be because they're anyway well off the highs. Prices have gone up, but now we're getting consumption data, and fuel consumption growth, the growth rate, is not as handsome as what it used to be. Are you doing anything with OMCs as of now?
Just watching. There's really not much in terms of an upside, at least. But you know what I think the market's trying to figure out on OMCs, Surbhi, is where's the turning point, and that possibly is that entry zone of sorts in case there's some sort of a 20-25% of an up move from there. But you know that up move will also take a while. It's not something that will happen very soon. So I mean, if you want to wait for 3 quarters, 4 quarters just for 25% of an upside, you have much better options available. And look at the upstream companies. I mean, I expect Reliance to clock numbers this quarter, which could potentially be phenomenal. So you know, on all counts. So you know, OMCs probably don't yet make the grade, you know, in terms of investment theses.
Okay, Prakash, hi, good morning. Everyone's now talking about the recovery in PSU banks, you know, more about the IBC resolution picking up, the sale to asset reconstruction companies and all of that benefiting them. SBI, is it the time to buy SBI, or do you think there are better places to invest your money in the market?
No, I think SBI definitely is one of the potential key beneficiaries of this entire revival. And what seems like have happened is SBI doesn't have the overhang of any kind of an M&A that might come through from the banking sector, because it's already gone through acquiring all of its subsidiaries and has digested that, has stabilized that acquisition. So I think from that perspective, it's the other larger banks which are slightly at a higher risk, like the BOBs and the BOIs of the world. But SBI could probably be the first to get off the block in a new revival phase of sorts. And so what's important is that this bad bank experiment seems to be now getting slightly more of a semblance of possibility, for the simple reason that that's the only big option left. You know, we've tried everything out. Things have worked to some extent, but most of it has been exhausted in terms of whatever armory the government had in terms of, you know, setting this right. Capitalization is not going to work. M&A is not so easy and it's very long drawn. So probably, you know, the bad bank or the ARC model is something that will work, and then it'll become easier for the likes of SBI to have a reset and start afresh. So that I think is going to be a good re-rating point. So yes, SBI is good, but probably again that will give you enough indications when to buy it. Right now probably it's a bit too premature.
Okay, Prakash, good morning. I wanted your thoughts on 2 stocks which at one point were the flag bearers of the market rally. You think they found their mojo back, Maruti and TVS Motor?
So, you know, I think Maruti was just a little bit of a slide because of some FI selling getting into its final rounds and intensity, because I've seen the likes of Maruti, HDFC Bank, HDFC only see this kind of a sell-off when, you know, it's right at the fag end towards the exodus. And that's why Maruti suffered. But if you see the parameters that drive Maruti's fundamentals, and whether it's production, whether it's sales, whether it's margin improvement, whether it's new launches, everything is absolutely, you know, it kind of checks all boxes. And from that angle, 8500 or sub 8500 was a very good opportunity to get into that turnaround. So Maruti could probably continue with a little bit of this momentum, but don't expect it to get re-rated and have a 15-20% up move in the next 2-3 months, unlike earlier times where you know the base effect was very positive. Incrementally, it has to work harder to keep on moving up in terms of the value. But TVS Motors, I think, Anuj, there's a lot riding on this BMW launch. And, you know, while that builds expectations very highly, I think TVS Motor will have to come back with margins. And if the margins are anywhere close to the double-digit mark, only then people will want to give it a PE multiple, which is slightly this thing. I think right now the growth is being driven more by a combination of 3-wheelers and some of the high-end 2-wheelers. But I don't think TVS would have an uninterrupted kind of a move upwards.